Yes, we've been talking about what a wonderful spot it is to live for literally forever. It is a great spot, Adelaide. Joining me in the studio now is Chris Gill. Chris is Courses Lawyers and the man we go to for every property question that we have available. How are you, Chris?
Good, thanks, Tim. Thanks for having me on the show.
Good to see you again. Let's start off perhaps by talking about auctions. How are they performing? What are some of the things that you're seeing people fall short on when they're gearing up for an auction?
With the auction, I think everyone has to realise that they're buying on an unconditional basis. Now, that's the key to it. They have to be prepared before they go to the auction in a number of areas. Firstly, they need to know the contract. They need to know the documentation. You know, they've got the ability to review the documents with you as the agent, you know, at least 3 days before the auction.
Yep.
So they get a chance to seek some advice, speak to their conveyancer, speak to their lawyer, know what they're buying. And they also get the chance to negotiate any special terms with the agent that they may choose. The vendor will control the conditions that they want.
Yes. And
you have an opportunity to review those conditions. Maybe negotiate a longer settlement, faster settlement.
Yes.
In conjunction with the agent. So you do have some control as a purchaser, but you need to make sure you do your homework.
Faster settlements are always good, I think. From your point of view, over the last 6 months, have you seen any particular issues arise out of contracts and auctions and that sort of thing that people should be aware of?
I think a lot of people, because they don't do their homework, they find out that maybe there's an easement on the property, or perhaps there's some issues in relation to the building that they didn't consider. Once they've bought it at an auction, well, really they don't have any recourse.
Yeah.
So it's just important that they actually understand what they're buying.
So if they felt uncomfortable about talking through the potential purchase with the agent, sometimes people like to keep that a little secret, or don't want to divulge to the agent who's handling the property that they're really interested. They could always go to someone like yourself and have you review the contract and the Form 1s for them? Yeah,
certainly, yeah. People if they buy a car for their children, they go and get the RAA to check it out, and it's a $5,000 purchase. Yeah. They buy $1 million house and they don't get anybody to look at it for them. It seems out of perspective for the investment they're about to make. And
of course, building inspections and the like need to be done beforehand.
Yep, so they certainly do. Yep.
You'd be advising them, if that was what they wanted to do, that they made sure that they were well and truly au fait with all of that?
That's right. They need to know that the opportunity is there for them to make all their inquiries. There's a lot that they have to think about when you're buying a property, and purchasers tend to just bundle into the auction. They focus on the auction and how they're going to bid and what the process is. They don't think about all the lead-up work that they have to do.
Yeah. Going on to some of the other issues surrounding contracts, and here's one perhaps without notice, but I know you'll know the answer. Land tax. We announced prior to the auction that land tax will be dealt with in the contract. And I know that most people who are buying a normal residential property that the owners live in, it's not assessed for land tax. But what happens if it is an investment property or the like? How is land tax dealt with for the vendor and the purchaser?
Firstly, I suppose from the purchaser perspective, if they're buying an investment property and the property's land value is above the threshold, which is about 300 odd thousand, so a lot of properties don't fall into the category in any event, the single holding land tax is adjusted between a vendor and purchaser at settlement. So it might be $900 a year. It'd be prorated for the financial year. If the purchaser intends to live in the property after settlement, they pay the land tax adjustment to the vendor, and then they can make a claim back against Revenue SA or the Land Tax Department to get a reimbursement of that money that they've paid.
Presumably at the end of that financial year, or immediately?
On completion of settlement.
Okay.
But they have to pay it and then get it back.
Right. So that satisfies the cycle of the money turning through? And
it does.
Okay.
Now, if the purchaser's buying it as an investment and they're buying from an investment property, they pay the land tax, but because it's not a principal place, they don't get a credit back.
Of course.
It's a cost of running the property.
All right. Let's extend it one step further. That's adjusted on the single holding basis.
Yes.
If the purchaser had other properties and had a higher repayment to make across land tax, is that factored in later and recharged, or is it just left for that year and then bumped up later on?
Yeah, land tax is assessed at midnight 30 June.
Yep.
Whatever the assessment, and whoever owns the property at midnight 30 June, that carries for the whole of the next financial year. So if you buy or sell during a year, it won't change until 1 July the following year.
Okay.
following financial year. So you inherit someone else's liability or benefit from them, but then it's up to you to make sure that you get it right from the July next year.
Right.
And you need to know before settlement, if you do own multiple properties, there are ways you can minimise your land tax.
Of course.
So you've got to get that advice before settlement. If you don't do it before settlement, it's too late to change it without having stamp duty implications and a lot of cost.
Yeah, okay, so presumably you're talking about ownership names and all of that sort of thing, and the body which owns that property might be different to another, therefore.
Yeah, it's called multiple holding land tax and single holding. It's quite a complex area, but to explain it is difficult without having it.
Would need a whiteboard.
You would.
Yeah.
And an accountant's degree.
Yeah, exactly. So Chris, perhaps moving on, the banks, you're at the coalface in terms of settlements and things like that. What's happening with settlements? From our point of view, occasionally we're seeing them delayed because banks are not ready for settlement. People are borrowing, or buying I should say, subject to finance, and that's holding up things. What's the rundown on where they're basically holding us up at the moment?
Well, previously we would have a settlement delay maybe 1 in 100.
Right.
We're getting closer to maybe 25% at the moment, and it's for two reasons. A 60-day settlement relies on the purchaser generally getting finance. That used to take a week, maybe 2 weeks. It's dragging out to 2, maybe 3 weeks, 4 weeks. So a purchaser's controlling the first part. When the finance is approved, then from a conveyancing point of view, we get involved.
Right.
Now, that may only leave us 2 weeks to get a vendor's instructions out and get a mortgage discharge.
Yes.
Now, that used to be 3 days. 10 years ago, we could ring up the bank, they would process a discharge of mortgage, and we'd be ready to settle within a week.
Sure.
Now the banks, especially if they're losing business, tend to take 21 days, 28 days. And so we're not able to do too much for the vendor until the purchaser's got their finance.
Of course. Is there a correlation in this between perhaps banks having trimmed down on their staff numbers, do you think, at all?
Yeah, I think that's part of it.
Yeah.
Finance brokers being an intervening part between the purchaser and the bank
adds
another link to a chain.
Right.
And so you're reliant on another party to be doing, to do what they need to do.
Yep.
Now, that's usually not an issue, and the finance brokers are good at what they do, but it does take an extra step each time.
Okay.
And also now with the banks have outsourced all of their settlement work.
So
and I think we're dealing with call centres, we won't call you, you call us.
Yeah.
And so the conveyancer's role has become more and more of a sort of an unpaid job of a bank employee.
Massaging the whole thing to
it. We've got to make sure that we're the bank's diary, and it's up to us to keep pushing them. Now that's possible. However, we can't, due to privacy, get all the information that we used to be able to get. So I think it's up to the vendor and the purchaser to really make sure that they're also negotiating and liaising with their bank, keeping in contact with the conveyancer and intervening and helping if the conveyancer's hitting their head against a brick wall.
And one would suggest, take it a step further, that a very astute buyer in the marketplace today would have their funding pre-approved, so that really they're only relying on a valuation of the property that they're buying to keep the whole thing moving. If they've got pre-approval in place, that's a long way down the path to having that all sorted out. It
is, because a pre-approval doesn't guarantee the loan will be approved.
No.
But at least all the groundwork's been done. You've probably provided copies of all the the income statements, and if you're in business, they want to see their profit and loss audited. So if you know what you have to do and you can provide it in the beginning, it will save a considerable amount of time.
Excellent.
And sometimes vendors aren't prepared to give you more time. So from a buyer, if you want to make sure you get the opportunity of purchasing and you can save some time, it's certainly worth doing.
All right. Chris, stay with us. We've got some questions coming up shortly. Now we're going to go and have a look at some of the sold properties on our Going, Going, Gone segment.